Okay, so today I'm going to touch base again real quickly on trend lines. What are trend lines, how to draw them, what trend lines mean, and then also I'm going to go over support and resistance. Okay, so let me just recap. What I went over on the training that was dropped today. So first, all right, we're going to go over trend lines. Okay, so in the market, okay, right now I am looking. What you're looking at right now is called a naked chart. Okay, this is a naked chart, and pretty much what a naked chart means is that it only has the price action, which is this chart here, and no use of indicators. Okay, so indicators are tools that you can add to your charts that help you trade, but over time, I've come to learn that it's actually a lot better and more simpler to be able to trade naked, and you become more skillful as well too when you're able to just look at this and be able to make minimal uh, and analysis so that the chart looks clean, it's not cluttered, and it's not filled with a bunch of indicators that may just kind of just obstruct your vision on the charts. Okay, so I like keeping a clean, simple chart like this. So what we're looking at right now is the US dollar against the Japanese yen. Okay, we're looking at the US dollar against the Japanese yen. And this is on tradingview.com. Okay, you can create a free account. Okay, you go to tradingview.com, you can create a free account, and then once you create a free account, you can search any currency pair in the search box right here called a ticker. Okay, so I'm showing you how to do that. I'm typing USDJPY, and they're going to show you quite, you know, you may see quite a number of them here. Right? You see like 5 of them, right? So don't be alarmed. The reason why there's so many is because there's different forex brokers that show the price. Okay, so is there a difference? Not really. Between different brokers, there might be like a small slight change in the price, but primarily they're all the same. So you just go ahead and click on any one of these. I'm click on the second one. Just let it load. Okay, so again, so let's start. Okay, right now we're looking at USDJPY. Okay, and today I actually covered candlesticks. Okay, I covered what a candlestick is, which is one of these colored shapes you see here. So if you guys haven't watched that yet, go ahead and watch that as I explain what a candlestick is. Okay, so right now I am on the 1 hour time frame. Okay, I'm on a 1 hour time frame, which means every 1 hour, one of these candlesticks form. Okay, now just real quick, what does each candlestick represent? Okay, the blue means it's going up. The orange means it's going down. What is going up is what is going down, the exchange rate. Okay, all the blue sticks you see, all the blue shapes you see, it means that the exchange rate rose. Okay, it means it went up. All the orange means the exchange rate went down. Okay, so today I'm showing you guys how to draw a trend line. First of all, what is a trend? Okay, in forex, there's two trends. There's an uptrend and there's a downtrend, and then you have what's called ranging. Okay, we only trade when there's a trend, when there's a change in the trend. What does that mean? Okay, we only want to trade because in order to make money, this thing has to move. Okay, so we want to catch trends. This is a downtrend, right? You want to catch this downtrend for sales. Okay, you want to catch this. This is an uptrend, right? Uptrend is going up, downtrend going down. The whole idea of forex is we want to get in. You want to get in on trades when the exchange rate is about to reverse. See this? See up here? the exchange rate, it stopped going up and then it reversed down. So then, and then it started going down, right? You want to get in right here because why? Right here, the exchange rate reversed and it started going up. It started going up. Let me show you guys. Watch this. Let's do some math. If you would have caught this whole drop for a sell all the way down here, okay? If you would have caught that whole drop, okay, you could have made 404 pips. 404 pips could be $40, $400, or $4,000, or 40,000 US dollars. 40,000 US dollars that you made on your phone, on your computer. $40,000. Okay, this is a downtrend. This is what you call a downtrend. And then you have what's called uptrend. Okay, uptrend is going up. Okay, we only want to trade trends. What? Because trends give us a clear idea of where the market is moving. Okay, in an uptrend, I know it's going up. In a downtrend, I know it's going down. Now, when it's ranging, it means it's doing something like this. When it's ranging. Okay? This is what it means when it's ranging. In a Forex market, when it's ranging, it means that it's not necessarily doing an uptrend, and it's not necessarily doing a downtrend. It's just kind of going up and down, up and down, up and down, up and down like this. Okay? This is what's called when it's ranging. We do not trade. We do not trade when market is ranging. Okay, we do not trade when market is ranging. We only trade in uptrends and downtrends. All right, go ahead, remove this, all drawing tools. Okay, so why do we draw a trend line? Okay, a trend line would be, right? A trend line is a downtrend line, which means I'm tracking the movements of the downtrend. Okay, as we can see here between these 2 points, okay, it's going down. Okay, these two lines, these 2 points right here can connect on a trend line because they're on that same angle, same slope. Okay, see, it started here, came down, came back up. Okay, look what happened. Oh, also before that, when you're drawing trend lines, you always want to connect. If you look very closely, my trend line here, the green line, it's touching the top of the wick, the shadow, which is that thin black line. Okay, see that? It's touching right there, it's touching right there. You need to connect 2 or more points. 2 or more points for a trend line to be valid. Okay, right here I have 2 points. One here, one here. All right, this is a valid downtrend line. Okay. Now, why is this important? Why is this important? I can even connect this all the way back here. Okay, this line, if you see how once we draw this line, all of a sudden it brings a little more clarity to the movements in the markets here. See, it comes down, hits this line, breaks through, comes down, hits the line up here. Okay, comes down, hits this line up here, and then comes down. Okay, why is this valuable? Look what happened. Look what happened when it touched this trend line at these different points. It touched it here, and then what happened? Price dropped. And then what happened? Went back up. Touched it again. What happened? It dropped. Okay. What kind of what kind of order would you have wanted to get in? I just gave you the answer. What kind of order would you have wanted to get in right here? Right? At those points, I would open sell trades. I would get into a trade for a sell. Okay. Why? When you get into a trade for a sell, when I sell, when I sell USDJPY, I want the exchange rate to go down, right? US dollar gets weaker against the yen. Okay. How much could you have made if you have taken these trades? Let's do some math again. Let's say you got in right at that trend line, okay? And you rolled this all the way down here. That's 191 pips, okay? That's $19. That's $191, or that's 1,900 US dollars. 1,900 US dollars, all for just catching this swing. That's it. If that doesn't change your perception of money, I don't know what will. Okay, that's already $101 on a mini. Okay, right here. Let's do this other one. Let's see how much you'd have caught if you would have caught this drop right here. This 345 pips. Okay, 345 pips on a mini. That's $345. That's over 500 US dollars you could have made. Just like that. Do you guys see this? Okay. Do you see how? So think of this trend line. Think of this line as the ceiling of your home. Okay. Think of this as the ceiling. What happens when you throw a ball against the ceiling? Okay. Imagine the exchange rate is the ball. What happens when you throw a ball against the ceiling? It's gonna hit the ceiling. It's gonna bounce off the ceiling. It's gonna hit the ceiling again. If you throw the ball at the ceiling, okay, it's gonna hit the ceiling and then it's gonna bounce all the way down. Okay. That's the power of drawing a trend line. A trend line, okay, it tells me a potential area where price could potentially bounce off of in the future as well too. Okay, if we look over here, look what happened. Look what happened. Even though I drew this trend line previously over here, right? The trend line was valid in the future as well too, because we see move here quite a bit. Okay, so this trend line was drawn up far long. Okay, this area right here happened a while ago. Okay, but then you see over here, and look what happened. Look what happened. This gap right here pretty much means that this is the weekend. So here it was Friday, it closed, and then Sunday it opened up here. Okay, so here's what happened. The market opened up on Sunday almost right where we had our trend line. And then what happened? It dropped. It dropped. Okay, and then at this point here, it broke through the trend line. So once it did this downtrend was no longer valid. Okay, because in a downtrend, you're creating lower highs. Okay, you're creating lower highs. But look what happened. Okay, yeah, lower high here. So lower high means this high. This high right here is lower than this high, and then this high is lower than this high, and then this high is lower than this high. Okay, in a downtrend, you're always going to be creating that. So let me just draw it. In a downtrend, you're always going to be creating lower highs and lower lows. Okay, you're always going to be creating lower highs, lower lows. Okay, that's when you know that you're in a downtrend. But over here, where I have this arrow pointing, the exchange rate broke. It broke through this roof. Okay, it broke through this roof, and then all of a sudden now, it's not creating a lower high anymore, right? This is not a lower high. Okay, so once it broke through this trend line, and it started doing this downtrend is officially over. It's officially over. So now it's going to start going up. Okay. Market broke through this trend line. Now it's going to start going up for what? An uptrend, right? So this downtrend is broken. But do you guys see the power of this downtrend line here, right? I draw a trend line that connects, okay, two or more points that are on this slope. okay? But I have 3 here. And every single, and so the trend line acts as a form of ceiling, okay? It acts like a ceiling to the exchange rates. And by that, I mean, imagine throwing a ball against the ceiling. What happens when you throw a ball against the ceiling? It's gonna bounce off the ceiling and then it's gonna fall down, which is exactly what it did. If we look at it, okay? Imagine the candlesticks are the ball, right? You throw the ball to the ceiling, hits the ceiling, boom, bounces off. You could have got it for a sell right here, okay? Price action goes up, hits the ceiling again, right? Ball hits the ceiling, boom, bounces off the ceiling, falls. Again, you could have gotten to a sell at this point. Do you see that? Okay, that's one way of knowing when to get into a trade for Forex. Okay, you have to know when price is going to reverse, when price is going to go the other way. Okay, when it's going up here, I'm waiting for it. I'm watching it. Okay, and then you see it making these movements. Okay, look, you look here. It started going down from here, but then it started creating these lower highs. Okay, it started creating these lower lows, right? And then I see this. I see it go up once. I see it come down. Okay. Then even from here, even if this was all that I saw, even if this was all that I saw, okay, you could have still connected. This see how this line was even relevant in the past as well too. See that? See how I draw that? I pulled this line back, but you see how it was relevant over here. Do you see how it was relevant over here? Do you see how it was relevant right here? Okay. So I draw this line, and then I see price moving like this. I see it moving. I see it getting closer to the trend line. You guys see this? I'm over here on the bottom right. Okay. I see it moving closer to the trend line. So what am I going to think when I see it hitting the trend line? Okay. If it's done it over here, chances are it could do it again right here, which it did. Hits the trend line, boom, bounces off. You guys could have made about $500 right here. $500, $5,000, $50,000 from this right here. That's a downtrend. Okay. Let's go over uptrends. Okay, so that was a downtrend. I'm gonna go over uptrend. Uptrend is pretty much the complete opposite. Let's scroll around. Let's go in a higher time frame. Let's go in a 4-hour time frame. 4-hour. Find a good example. Let's see here. Let's go back on 1 hour. All right, so uptrend. Okay, let's cover uptrends. Uptrends connect 2 or more points on a rising slope. Okay. Uptrends, and they create higher highs and lower lows. All right, what does that mean? I'm going to draw it out for you guys. Okay. So obviously right here, I can see off the bat, I see a little uptrend here. Okay, I see this point here, I see this point here. Okay, and this point here. Okay, so you guys can see, you can just imagine a line that's running through these 3 points already. Okay, that's an uptrend. So let me delete this. Okay, again, so I'm gonna use this tool here. Second one from the left, click out. It's like trend line. Okay, you click once, and then you can click and drag and move it wherever you want. Okay, now I'm gonna connect. If you guys look, I'm gonna connect the top of those black thin lines. Okay, I want to make sure I want to get as many touching as possible. Okay, so I'm click, just adjust this. Can even do something like. Okay, so you guys see that? You can see how my trend line here, it touches just about as many points as I can 1, 2, 3, 4, 5, 6, 7. Okay, this is an uptrend. Okay, this high right here is higher than this high. Okay, this low is higher than this low. This high is higher than this high. This low is higher than this low. Do you guys see that? Okay, so it's creating these peaks that get higher and higher. It's like this. It's doing something like this. It's creating these every time it makes a peak on an uptrend, the peak gets higher and higher than the previous one. Okay, this will be higher than this one. This will be higher than this one. This will be higher than this one. Okay, that's an uptrend. That's what an uptrend creates. So when you see this, when you see something like this, that's when you know that you have a valid uptrend. Delete. Okay, so I drew this. So I drew this trend line. Okay, and look what happened. Just like we did for the downtrend. You touch here. You touch here. Okay, you touch here. 3 points where the exchange rate rejected this ceiling, bounced off the ceiling. Boom, boom. Now these bounces aren't as big as that downtrend, but hey, you still could make some money. Okay, let's say you got in right here. Let's say you got it at this first area right here. First sell. Okay, that's 238 pips. Okay, that's $24. That's $240, or that's $2,400. Whatever you, depending on your risk and account. Right here, boom. This is 180 pips, $180. This is how much? $136. You guys see this? See how much money could have been made within this thing right here? 236, 180, $133. You could have made a couple $100 from just catching those little swings. Okay. The trend line acts as a form of ceiling. Think of a ball when it hits a ceiling. When a ball hits a ceiling, it's going to bounce off the ceiling. Okay. In Forex, how do you know when to get in a trade? You want to get in a trade when you think price is going to go the other direction. Okay. That's one of the biggest questions. How do I know when to get into a trade? You get into a trade when we project that price, the exchange rate is going to go the other way. How long does that trade take to unfold? It depends, Abraham. It depends on the time frame that you're in. Okay, so right now I am on the 1 hour. I am on the 1 hour of USD JPY. So what the 1 hour means is it takes 1 hour, takes one whole hour for each of these candlesticks, right? Each of these shapes. It takes 1 hour for one of this to form. Okay, but also besides that, it's USD JPY. It moves at a different. So like, just because I say that we're on the 1 hour time frame and that it takes 1 hour to form this, it's not going to be making a stick every single hour of the day. Okay, it's only going to be moving and creating these formations. Okay, when this pair is being traded the most. Okay, and that's kind of USD JPY. It moves during London session, Tokyo session, and London session. Okay, so London session is like 3 in the morning to like 12 p.m. noon. In Tokyo, if you go over the previous slides I posted, I cover the different trading sessions, but different pairs will move at different speeds during different time trading sessions. And so, let me see. Did that make sense, Abraham? Okay, so the speed of the movement of of the candlesticks, it depends on the time frame that you're in, okay, and then also the session that you're in as well too, okay. Certain pairs are traded more than other pairs during different time zones, okay. So um, the USD, yeah, so USD JPY should probably move. It moves during the Tokyo session and during New York session. So if you're up during that time, right, this could be a pair that you could look at because then it would be moving pretty quickly. Okay, so that's that's an uptrend. That's an uptrend. Now what I'm gonna go over now is support and resistance. Okay, support and resistance it's the same concept that I just went over, just like trend lines. Okay, you have a ceiling and then you have a floor. Okay, and I'm gonna show you guys how to really like a really quick way to understand how to get into a forex trade using just support and resistance. Okay, so let me go ahead and I'm gonna clear up this whole chart. So now I'm gonna go into the 4-hour just so that it gives me a little more. Okay, and what you guys will learn as you guys look at forex charts a lot more is that this is all that is ever going to do. It's just going to create, it's either going to go up or down. And that's it. Our job as traders is to find out when it's going to make these reversals so that we could catch this whole drop, or that we could catch this whole rise. That's really all that we do as forex traders. You're trying to see when the best potential setups, opportunities for you to get in where it's going to go up or down very, very massively. All right, so I'm going to cover support and resistance. Okay, so think of resistance like the ceiling of your house, and think of support the floor of your house. Okay, so let me just draw an example. So imagine this is resistance. Okay, this is resistance. This is, let me make this another color. I make this yellow, or no, that's not a good color. I'll make this green. And this is support. Okay, in Forex, this is what happens. You have your exchange rate, and it's going to do something like this. Okay. Like I said, we're trend traders. So what do we do as Forex traders? We want to get in at areas where it's going to be a big move in the other direction. Okay. That's it. We want to get in at points where the exchange rate is going to reverse and is going to move in the other direction. The longer it moves, the bigger the move, the more money you make. Okay. Up here, you would get in for sells. Down here, you would get in for buys. Okay. So resistance and support, right? These act as like, you guys know those have you guys ever been bowling? If you ever gone bowling and like for kids they have like those gutter lanes where the bowling ball can't go off into the side. Think of support and resistance like those lane guards in bowling. Okay, it keeps the ball within the lane. Okay, that's the same concept of support and resistance. Okay, they're designed to give you an idea of keeping the price within a certain area. Okay, now it's not always going to stay within that. Okay, and as we progress, right, you start seeing that. Okay, eventually, okay, it's either gonna break, it's gonna break support, and then it's gonna start going to like a downtrend, or it's gonna go up, break resistance, and start going into an uptrend. Okay, so those are things that we're gonna cover, but for the most part, think of support and resistance of just like that, of these protection lines that just keeps price within that area. Okay, and you want to get in on the points where it's going to make a big reversal, because the bigger the reversal, the more money you make. Go ahead and delete this. deletes, deletes, delete, 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 delete. Okay, so it's the same thing like trend lines. In order to draw support or resistance, you're going to need to connect two or more points. Okay, so we look at this area here. You can automatically see, right? Where are the points that are ending up, that have ended up kind of at or around the same area? Okay, so you kind of just look, off the bat, you can see that right here. So the top right here is where I'm going to draw a resistance, and you want to connect as many as possible. So I'm going to connect just about right here. Okay, this would be a resistance, because why? I have several points here. 1, 2, 3, okay, 4, 5. 5 different points where it hit this area, this line right here, and it bounced off. Okay, what was the example that I just showed you guys when I drew that out? What happened when it hit the resistance? It dropped, right? What did I say? Boom, 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 boom. Okay, where would you have wanted to get into orders for sell? Right here, right where those orange, right where those yellow circles are. Okay, if you would have gotten to sell orders right there, you would have been able to ride those trades down. You see that? It's pretty simple. Okay, so that answers the question of, how do I know when to get into a trade? Okay, this is one way. Resistance is one way. The ceiling, price action right here, price exchange rate is the ball. Hits the ceiling, bounces off. Hits the ceiling, bounces off. Hits the ceiling, bounces off. How much money could you have made? Right here. Boom, $280. This one, boom, $280 again. Boom, this one, third one, $377. Boom, this one over here, the fourth one, $525. Do you guys see that? See how much money you could have made? I used to go and work I used to work at the mall for $7.25 an hour. And I used to go slave away for that much. Look how much money you could have made pressing a couple buttons from your smartphone. That took absolutely no extra effort from your life. That's powerful. That's resistance. Okay? Resistance is the ceiling. What is support? Support is the opposite. Support is the floor. Okay? So same concept. Resistance, you're connecting the peaks. Support, you're connecting the bottom peaks. Okay? I can use the same area. Okay, I can use the same area. Look here. I have 1 point here, 1 point here, 1 point here, 1 point here, right? Look at this, right? This area here. And as you draw this enough, your eyes will get trained, and you'll see this very automatically. But if I draw a line here, okay, if I draw a line here, right, this would be an area of support. Now here's where it can get very, here's what blows people's minds. Okay, up here for resistance, you took trades for sells, right? What would have happened if you would have also taken the same trades for a buy when it bounced off support? Watch this. Yeah, one touch here. Yeah, one touch here. You got broke. Okay, you got okay. Let's say you caught this initial downtrend from here, from the resistance down here to this first support, $280. $280, and then you close for, okay, let me just track this down. Okay, $280. And then you close out the sell order down here. And then you get in for a buy. The buy right here. You run this all the way back up. That's another $300. Okay, $300. Then you catch that sell down again. You write this up. You close that buy order. You take profit, $300, right? Then you get into a sell order again up here because you see it hit the ceiling. Write this down. $280. Okay, $280. Then what do? You close out your sell order here. You get in for another buy. You write this up. $208 again, just about. And then you write this thing down. Boom. All the way down here. $380. Okay. Just see that? Just on this movement alone. On this movement alone, you could have made, let me see, what was that? Let's do some math. 280 plus 300 plus 280 plus 280 plus 380. That's $1,520, guys. On a mini lot, this is $1,520. Equals 1,500. If you would have caught this up down swing, up down swing, up down swing, this whole movement here, you would have made on a mini lot, risking $1 a pip, you could have made $1,520. When was the last time you could have made that much pressing a couple buttons from your phone? Never. But now you can with Forex. So give yourself a pat on the back. Do you guys see that? Okay. Resistance, ceiling, support, floor. Okay. Think of it like the lane guards on bowling lanes. It keeps the ball. Okay. It keeps the ball within a given area. Okay. And in Forex, right, you want to get into a trade when it's about to make a reversal, when the exchange rate is going to swing the other direction. The bigger the swing, the more money you make. Okay. So, okay, so we covered, so I recapped trend lines, and then also I went over support and resistance. So for the next 5 minutes, if everyone has any questions, if you guys want me to go over anything again or clarify something, go ahead and just unmute yourself and just ask. Otherwise, if no one says anything, I'll go ahead and I'll end the meeting.
What?
Does anyone have any questions? All right, awesome. So appreciate you guys. I apologize for hopping on a little late today. Ran a little late with a previous call, but appreciate you guys for taking time to hop on. So let me go ahead. I'm going to end this. I'll upload it to YouTube, and I will post it in the group chat, in the group page in about 20 minutes. So appreciate you guys. Hope you guys have a great night. And again, thanks for hopping on.